Good morning, good afternoon, and good evening to everyone that's listening into this amazing podcast, 50 Shades of Accounting, where we don't just talk numbers, we talk about strategy, growth, and all the different topics that are actually shaping the future of accounting. I'm your host, Pramit, and today we're going to be diving into the hottest topics of the industry, that is ESG. I'm sure you've heard it, environmental, social, and governance. But what does it really mean for the accounting firms and how we can turn compliance into a gold mine? Stick around because we're here to break it all down right here in 50 Shades of Accounting. Today we have a special guest with us. He brings in 40 plus years of experience and will be giving us all the hot details around ESG. I will let Peter introduce himself. Hello, Peter. A very warm welcome to the ESG show today.
Hi, Pramit, and thank you for giving me the opportunity to come on the podcast today. And hello, everybody, wherever you are. So I'm Peter Ellington. I'm a Dr. Peter Ellington, actually. I have a doctorate in education, and I run an accountancy practice called Triple Bottom Line Accounting. And we employ 12 people in the UK, and we have 3 people working with us from QX in India. Triple Bottom Line Accounting, this is a concept which is people, planet, and prosperity, and or people, planet, and profit. But we call it prosperity because we're kind of like looking at what makes us prosperous, and it isn't just money.
Thank you so much, Peter. And I think it's worth mentioning, you've been part of the judging panel at the Accounting Excellence as well for this specific category as well.
Yes, that's right. There's 3 of us, and I'm one of the judges on the ESG Pride Award. So as an accountancy practice, we do what you'd expect an accountancy practice to do, i.e. sets of accounts, tax returns. We do a little bit of R&D. We'll help people get ready for investors and so on. But in addition, we do management accounting and advisory, but also net zero assessments. And recently, we've been awarded quite a large ESG project. So being a judge of the ESG Awards was fantastic because I can see what other practices are doing in this space, and gives us some strategic advantage to see what's going on. But it's not really about a strategic advantage. It's more about seeing where the rest of the accounting profession is so we can collaborate, because our purpose is really to show how an accountancy practice can be involved in these things and why they should, and justifying it by showing that how successful we can be by being in this space.
Thanks so much, Peter. And we would love to dive deep right in to understand what this ESG is about. So, Peter, why is everyone talking about ESG these days? And, what's driving its growing importance, particularly for the accounting?
Okay, so I think you have to layer the accounting profession to some extent, looking at the big 4. And then taking a UK environment, we then have mid-tier practices, the next 50. And then you have the smaller practices like mine, less than £1 million in turnover. And I think that structure is true across the globe. You get these bigger players, and then mid-tier, and then smaller. The top tier, they now, take the KPMGs, PwC, Deloitte's of the world. They've now got environmental, as ESG or sustainability, all these different terms for the same thing, consultancies now, because they deal with the larger organizations, and larger organizations have their stock exchange requirements to do reporting, and those reporting requirements be driven very much by the investor communities. And for an investor, ESG or sustainability issues are a risk to their investment. We're seeing this in Florida, for example, in America, whereby that damage that is being done by hurricanes is worse because of climate change. Now that creates a greater insurance risk. And of course, if we can't insure, or insurance gets more expensive, it gets more expensive to run businesses. And we're not talking trivial amounts, we're talking billions and trillions. And if climate change it worsens, which is predicted if we carry on burning fossil fuels at the same rate that we are, then these issues, these weather events and issues are going to get worse, and it's going to get more expensive.
Thanks for that, Peter. I think I was curious to know, when we talk about the ESG regulations, who is exactly affected by it, and why is it relevant across different industries?
Across the globe, we get these categorizations of companies into large, medium-sized, small, and micro. So the larger organizations are being driven by the ISSB standards. The IFRS has introduced sustainability standards, and we've got S1 and S2 in at the moment. S1 is a sort of like what they're going to do generally around sustainability type issues, and S2 is specifically about climate change, but we're going to have a whole series of those, including biodiversity and other issues around there. So we start really by having the requirement for the larger organizations. And larger organizations are having to report through their governments adopting these standards into law. They're having to report their carbon footprints, and then they're having to report their plans to reduce their targets so that they get to net zero, being 10% less, down to 10% of your starting number when you first started measuring. So we're seeing that as a requirement, and then we're getting other requirements in addition to climate change carbon accounting requirements coming in for larger organizations, for biodiversity reporting, and then social reporting as well. So there's a whole change to reporting requirements, and it's called integrated reporting, and we're reporting on different capitals besides just the financial capitals.
So Peter, are there any specific businesses or organizations that must comply with these ESG standards?
The requirement is across the whole economies, and it's not specific to certain sectors.
So, an accountant, or usually the accounting firms would say, this wouldn't apply to me, or it wouldn't impact me at all. But what is the role of an accounting firm? You've been part of the ESG work you've been doing. What is the role of an accounting firm, if you would like to just talk more about it?
Okay, so I've started explaining that the requirement is at the moment with larger organizations. And for those larger organizations, the accounting firms are dealing with integrated reporting mainly as a requirement. So they're reporting to standards that are being set, and they're reporting their carbon footprint, they're reporting their effect on nature and biodiversity, ecology, if you like. They're also reporting their social impact, and it's all part of their annual report and account as to what they release. And what we're seeing is those organizations are getting better prepared for managing the risks that happen as a consequence of the issues that are occurring globally, but also are able to seize on opportunities that make their organizations more profitable.
Thanks, Peter. I think definitely more for the accounting firms to do, and they definitely have a larger role to play. But how can accounting firms go beyond the usual compliance and turn ESG into a business asset for their company?
Okay, so as I said, I've talked about the larger firms and that requirement coming down from larger organizations to medium organizations, and over time it's going to affect everybody, okay? Because one of the main drivers there is if large organizations have to report these things, they also have to report in their supply chain. And ultimately, everybody supplies to everybody else. And so you get dragged into the reporting requirements because your customers want you to tell them about your environment, social, and governance. And so that's one way of reporting. And how it affects smaller firms. For example, in the UK, in the National Health Service, from April 2024, there's a requirement for any new suppliers to have a carbon footprint measurement and to be showing that they're taking action. And now they're rolling that out across all of their existing suppliers. So this means that every organisation, no matter how big in the UK, if they're supplying into the NHS, they've got to be measuring their carbon. All organisations like that, many more of them, and public-based bodies and larger organisations, they're adopting that NHS strategy about improving the carbon footprint of their supply chain. And so when you start looking at the UK economy, it's ripple effect across the economy because everybody is everybody else's supplier. And so, even me, as a small accountancy practice, I've got 20 doctors and consultants. Some of them are doing private work into the NHS. Okay, and so over time, they're going to have a carbon footprint. Accountants, getting to your question, accountants can do this stuff. We do debits and credits. We measure people's profitability. We can also measure their carbon. Carbon really is just another currency, and there's some different rules about how you do carbon accounting as opposed to traditional accounting, but it falls firmly into an accountant's skill set.
It's a very interesting point you made, Peter. When an entity like NHS is requiring its suppliers to actually showcase their carbon footprint, the suppliers come in all sizes, and most of these suppliers, they could be working with an accountant and they would be relying on someone to guide them to get their metrics around the carbon footprint, which they can pass on to the likes of NHS and other entities, when it becomes standard globally. Again, like you said, it's a role that would come back even to smaller accountants, where they would be in that position to advise the suppliers working with the NHS then.
Absolutely. I'm seeing that already. I mean, we're less than £1 million turnover accountancy practice, and with 500 clients. And we are doing carbon assessments for organizations. We can do their carbon footprint. There's the Carbon Accounting Alliance. It's made up of over 400 organizations, and they're mainly IT organizations, and they're developing tools to do carbon accounting. Now, there aren't many accountants in that group. In fact, I've got an article in the UK Business Times, which is entitled Carbon Accounting, Where Are the Accountants? But however, this is just a temporary blip, I think, in that accountants have a natural role in this area, because one of the things I say is less carbon will often equal less costs, which means more profit. And so if an organization has 10 opportunities, for example, to reduce its carbon, an accountant can look at those 10 opportunities and look at the cost implications look at the business case and the cost implications. And that's where the accountant comes in, because they can associate the carbon reduction plan to the business plans and business opportunities and ensure that it's making financial sense as well as making sense to the planet as well.
I think you did briefly ask my next question that was going to come up, is to what are the different metrics for measuring ESG? And I think one point you talked about is profitability, how lower costs would mean more profit. But when we talk about the growth aspect of it and the adding to the brand value, could you talk more about how getting the carbon footprint right can help in getting those right?
Yeah, absolutely. I mean, the thing is once you start looking into this area, you realize how big it is. In the UK, there's a whole industry building up around this. We have measurement organizations such as the Social Value Portal. We have measurement criteria called TOMS, TOMS, and these are setting standards for what you might measure under E, S, and G. Okay. And you start kind of breaking it down. If you look at top down, you start breaking it down is what does the E mean? Okay, so the E includes climate change. It includes the effect of what you do on water management, on waste management, on biodiversity, and that's another way of looking at it. So carbon, the effect of what you actually do as part of your business. And then you could argue that the third category of the E is what you don't do, the things that you ignore, that you're reliant upon, that you might be causing damage to environmentally. And then if we look at the S, the way that we look at the S is that it's big impact on human resources. So what's your diversity? What's your inclusion? What's your health and safety? Things that you should be doing anyway. You then look upstream and downstream. So your upstream are your suppliers. So how are they treating their people? What's their equity, diversity, and inclusion like? And then downstream is your customer base. So how are you impacting on your customers? What's their carbon footprint, right? And then the fourth category in the S is around community and partners. And then what are you doing in your world? Who's your community? And that could be a local community, or it could be the other people that you work with. And what's your impacts there as well? And then you get into the G, and it's accountant. That's where the big accounting thing comes in. Whereas integrated reporting, you're reporting on the environmental elements, you're reporting on the social elements, you're trying to measure things. And of course, once you're measuring them, you can then audit and assure them. So there's a whole lot of auditing to be done as well, ensuring that the claims that people are making in this area are valid claims. And the whole governance area is kind of like a pull. It's putting the rules in place to ensure that you're making decisions that include the E and the S. And so those are kind of the main E, S, and G.
Thanks for breaking that down into ESG. And I remember from our initial conversations when we were about to start working with each other, you'd actually gotten Fran into the conversation to assess us on how we've been dealing with our people, what we've been doing as an organization. So I didn't realize it until this conversation come in on the different steps you were taking at your end when you talked about the upward and the downward stream in working with your suppliers and your partners, and how the importance of assessing them as well. So I just am able to connect those dots now. But when we talk about getting the ESG strategy right, how can actually firms evaluate the financial impact of these ESG strategies once they want to implement it?
It's interesting. There's a thing called the six capitals model. The ACCA, for example, has some lovely reports on integrated reporting and the six capitals. But to quickly just explain the six capitals, they're financial capitals. We all understand that. That's the investments coming in and loans coming to organizations. There's manufactured capitals. So those are like buildings, cars, things that we make, that we have on our balance sheet. Of course, people are starting to think there's a double count there. Well, yeah, different capitals. They're kind of like rings within rings. And then you have intellectual capital, what your people know, their morale, why they go to work, what they can add to your business. Then you start moving into the ESG area. And firstly, you have human capital. Okay, so where you are in the world, what combination of everybody that works for you as well, not just what they know, but how they work together, how they integrate with each other. Most organizations are people, aren't they? And then the fifth category is social and relationship capital. And so what are your relationships, and our triple bottom line accounting's relationship with QX is a relationship capital that we have, that we're working really well together, and we're getting greater value with the sum of the two things are greater than the individual parts. And then finally, natural capitals. Now, natural capitals being the environmental capitals, plus and negative, because more carbon you burn, negative, less carbon you burn is better, but also you can create positive impacts into the environment. Now, the thing is what we know at the moment is accountants, we measure the financial, we measure the manufactured, and sometimes we'll apply for a patent and we'll manage the intellectual. Now, what we're seeing is government saying, well, we need to change our economy so it's working in the green economy. We're seeing compelling arguments in that case now. Regenerated energy, which is generated by solar panels and wind and wave energy, natural resources, is becoming compelling in that it's less expensive than energy. What governments are doing is they're incentivizing their organizations through taxes, through grants, through incentives, through cajoling organizations to be doing the ESG, to be reducing their carbon. And this means that these human, social, and natural capitals are monetizing. And so they're going to affect the financial capitals. Now, where the money is knowing that's a fact. And so if you can get your organization to start respecting ESG, or the human, social, and natural capitals, you're one step ahead of the government's changes to incentivize you to do it. And so you can turn on that money tap quicker than anybody else. And we live in competitive environments, and if you can adopt the natural social capitals at the right point. And at the moment, it's for a lot of accountants that aren't aware of this stuff, it's about getting up to speed, starting to learn about what these things are. Because if you can understand them, you can see where the tax breaks are going to come in, and the incentives and the grants, and then you can help your clients, and then you can charge more fees, your clients can be more profitable, and you're basically on the money. It comes back to the triple bottom line concept: people, planet, profit. You actually make more money from doing the right things as well.
So you've actually led me on to my next question, where I wanted to explore about how ESG reporting has opened up new business opportunities, for firms. And at the start of the podcast, you did mention about it. You signing up a new client on. Could you shed some more light or talk more about how this is opening up new opportunities as well?
Absolutely. So a small accounting practice, we have taken on the ESG strategy review for a large LATCO, that's a local area trading company. They employ 9,000 people. They have partnerships with local councils across the country. Okay, and we're working on their ESG strategy. We did a thing called maturity maps, where we explained ESG issues for each area, environmental issues, social issues, and governance issues, and asked them whether they were beginner, intermediate, or advanced. And we gathered that information. We gathered the information from what they were doing in ESG, and this organization is working with local government, so it's doing waste management, it's doing care homes, it's building roads, okay, it's looking after buildings and facilities, okay, so there's a lot of environmental impact. And so they're very good on looking after the environment side of what they're doing, and they've got ISOs that prove that they're doing well, so their governance in those issues is very good. Okay, but what we're seeing is it's not integrated, and they need to look at the whole thing. But more importantly, they've got a massive, great big USP, because they're doing architectural work for clients in designing buildings, for example, and they can start bringing additional services in, which are looking at the carbon footprints of those buildings, and they're able then to charge more consultancy fees in bringing in that USP. Okay. This organization as well is is involved with prisoners and rehabilitating prisoners into their organization. So they get prisoners that are manual workers to work on building roads, for example. And so they're working very closely with reoffending prisoners. And the cost in the UK of keeping a prisoner in jail is £60,000, okay, a year. And so what they've done from the social, this is the community and partners aspect of their ESG journey, is they're saving the government £60,000 a year by getting workers into the workplace, okay, that are then earning a living where they couldn't get a job, okay, and creating a much better future for those people. So, you know, we're talking about it from the financial sense, but what the effect on society is massive. And then you can then start thinking, okay, hey, these guys, they're processing a waste and plastics, and you can make roads out of plastics.
Yeah.
So, you know, it's kind of like add. So rather than this LATCO looking at, you know, what they do, delivering a care home or delivering a road, and just making enough money to pay everybody and make a little bit of profit. It's the opportunity of ESG is massive, you know, making roads with reoffenders, just keep them out of the prison system, create a much better life for them. And then we're actually reducing the amount of carbon we're using by reusing the plastics out of the waste system. I mean, it's just kind of like, wow, add value, add.
There's compounding effect to it, right? It just keeps getting bigger and wider as we go along.
That's right. And you talk about circular economies, and you can't avoid the circular economy effect of the human side of it, you know, giving people a purpose beyond just making a profit or just creating, you know, doing good, getting up in the morning and feeling like you're doing something which is positive in the world as opposed to just using up its resources.
Thanks, Pete. I think we've heard quite a lot on ESG today, and I think there's going to be a lot of reading back as well that I personally need to do to make sure I keep up with this ESG topic that'll keep coming up. But, you know, looking ahead, you know, what should accounting firms do to prepare for the future of ESG and its evolving standards? Is that something you could talk about as well while we sign off for this podcast?
Absolutely. So one of our mottos is that you start by starting. Do something. Okay. And there's some super resources out there. There's in the UK, there's a thing called Accountants for Sustainability, A4S. And this is a charity that was established by King Charles 30 years ago. And they've got so much in the way of resources. It's a great place to just go and look and cruise around their website and see what they're saying. The accountancy bodies are doing so much in this space. You look at the ACCA, look at the ICAEW. They have courses that are 20, 30 hours where you can look at the whole topic, and you can pick up so much. But if you don't even want to spend 15 hours on that, there's organizations like Trace who do carbon footprints. They have 3 times 1 hour where you can learn about carbon accounting. There's another organization in the UK called Green Accounting, and there's a 1.5-day carbon accounting course there. So there's just so much out there, and so many good and useful resources. So you start by you start reading up a little bit, find out your facts. This is one thing, a lot of people are saying certain things aren't happening. There's some conspiracy theories, but if you were going to put your money on a bet, you'd go and find out the facts. And would you bet on something based on a conspiracy theory, or would you try and skirt around a little bit and try and get a consensus of opinion? And I personally go for the latter, but that's my opinion.
Thank you so much for giving us all the reference material. I think we have a lot of groundwork to do, get to get up to speed with ESG and how the future is actually changing as we go along. And Peter, we've talked about this, and I've mentioned in the past, change is the only constant. Only thing you need to do is keep up with it. So thank you so much for your time today, Peter. It's time to wrap up today's episode of 50 Shades of Accounting, where we've actually explored about how ESG isn't just about checking boxes, it's about creating new opportunities, adding real value to your clients. If you're not thinking about ESG beyond compliance, now is the time to start. As Peter said, you just need to start, right? And we've heard the accounting firms have a very unique role to play in shaping the future of sustainability and governance. Thank you so much for tuning in, everyone, and a huge thanks to Peter for sharing those insights. If you're ready to stay ahead for the curve, be sure to subscribe and follow us for more game-changing conversations. Until next time, I'm Pramit, and this is 50 Shades of Accounting. Thank you so much, everyone.